Gold is rising because the world economy is not doing well. Certainly, gold is rising as well because there's a monetary debasement that continues and rate hikes are likely to continue as well, but in a very moderate way. The estimates for the ECB are looking at a maximum level of 3.25% and even a reduction in rates as from July, which means that central banks are not paying enough attention to core inflation. Core inflation is actually rising while the headline inflation is moderating. And there's a tremendous amount of information out there trying to tell us that there is a risk of deflation because one piece or one price are changing. But actually that is not the case right now at all. So if we look at what the market is starting to discount on the one hand is that central banks are going to continue to be extremely accommodative. The second thing that markets are discounting is a much weaker environment for the global economy, and that is why the vast majority of those sectors that are very exposed to the cycle are doing a little bit worse. However, it is also true that in many cases markets are discounting one thing and the opposite. For example, that central banks will cut rates as from July while they expect no recession. That is very unlikely. So we need to be prudent. January is a month in which we're seeing asset prices rising in unison. There is an important signal out there, which is gold rising, which means that things are much worse than what many may want them to be. And we need to be very aware of the fact that the global economy growth remains very poor, and at the same time, central banks may remain accommodative, but that doesn't mean that they're going to be easing.